Viewers, good morning. Today I am talking about the income tax rules of Government of India. All the salaried people and pensioners are liable for income tax. In the same manner, all businessmen and corporates are also paying taxes accordingly. Now we may see what about the income tax ceiling limit for the salaried class and the senior citizens. What are all the other incomes to be clubbed with this for filing of income tax returns? The income tax returns are to be filed by all employees before 31st of every July of every financial year. This is very important. If we fail to file our returns before the due date of 31st July, we are liable for penalties, that is up to 5,000 for income exceeding 5 lakhs, up to 1,000 rupees for income below 5 lakh rupees. Now we may see what are documents required for the filing of returns. The employer will issue Form 15 and the bank and other financial institutions will issue Form 15A. Accordingly, all the TDS should be tallied with the Form 26A that may be downloaded from the income tax traces site. Hence, we must get ready all these three forms and we file it accordingly. You need not depend upon anybody. You may file the tax by yourself by registering by yourself in the income tax website. Now we may see the tax slabs, that is the income tax ceilings fixed by the Government of India. Now the government have fixed new tax regime also. The existing old tax regime is there and they have also added the new tax regime. Accordingly, there are some changes. We first see what about the ceiling limit for taxation. First, up to 2.5 lakhs in the old regime, no tax. 2.5 to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20%. Exceeding 10 lakhs, 30%. Now, in the new regime, here is the limit. Up to 2.5 lakhs, no tax. From 3 to 6 lakhs, 5%, 6 to 9, 10%, 9 to 12, 15%, 12 to 15, 20%, 15 and above, 30%. Based upon this, the taxes are levied and an additional tax of 4% has just to be also taxed. Now, you may see what are all the exemptions allowed. We may see the major exemptions from Income Tax Act are 1013A HRA, 10.5 LTC, 1034 dividend up to 10,000, 1038 long-term capital gains after paying TDS, 1014 internet allowance given by the employer, 10 food allowance given by the employer, 1014 DA uniform allowance, 80D medical insurance premium for self and parents up to 50,000, 80DDB 1 lakh for self and senior citizens excluding medical reimbursement. 80C, the following items are clubbed: PPF, NSC, NPS, EPF, LIC. 80CC, CCC, annuity plan of LIC. 80CCD, central government pension scheme up to 50,000. 80D, medical expenses of disability up to 1.25. 80DDB, medical expenses up to 1 lakh, self and family of specified diseases. The main sections are for house building, advance related sections are 24B, HBA principal up to second loan 2 lakhs, 80E, HBA interest 50,000 additional benefit, 80G donation to charitable institutions up to 2000. 80GG 60,000 for own house and no HRA received. 80TTA 10,000 for interest received on savings bank accounts. 80C main major reduction exemption source 1.5 lakhs LIC and others. 80CCC 1.5 LIC pension schemes. 80CCD NPS APY 10% of basic pay plus DA. 80CCD 1B additional NPS 50,000. The FD interest exemption is under 80TTB up to 50,000 for senior citizens, not for others. The HBA section 24B up to 2 lakhs for interest. 80C up to 1.5 lakhs in principal. 80EE up to 50,000 over and above the interest above section 24. And these are all the main sections. We have now learned what about the Income Tax Act, what about the total income, taxable income, and what are all the exemptions, and what are all the importance of filing the IT return. You please be vigilant in filing the returns within the due date. Thank you.